Hi, this is Michael Waits, and welcome back to Insurance for the New Possible, a Chubb conversation. We are joined today by Rodrigo Valiente, a VP and the head of digital for Latin America at Chubb, and Moises Flores, the CFO at Kavak.com. How are you two doing today?
Very good, very good.
Very good. Thank you for hosting us.
It's my complete pleasure. It's our complete pleasure. Before we get to the main part of our conversation, let's get a little bit of your background for some context, and let's start with you.
Well, Michael, I've been working in the Chubb for the last 6.5 years.
Okay. And where are you from?
Argentina originally.
Got it. Go
I'm
ahead.
43. I started with Chubb when we started the whole digital team in Latam. I think I was employee number 2 or so.
Interesting.
Yeah, and before that, I was doing M&A and investment banking in New York for financial and tech companies.
Okay.
And before that, I was working in an accelerator and incubator both in New York and in Barcelona.
Interesting.
And then beyond that, many other things. But I think those are the most relevant for the purpose of this conversation.
That's really interesting. Moises?
Yeah, in my case, Mexican for starters. One of the few guys at Kavak. My background is a bit more traditional than yours. I used to be a consultant almost my entire life, almost 10 years of consultant in Latin America. And then I joined Kavak 3 years ago, right after we closed the Series A. And I've been there for Series B, C, D, E, and then our latest.
Where were you a consultant?
McKinsey.
McKinsey, fair enough. There is a movement that I've seen over time from consulting companies like McKinsey, like BCG, like PwC. McKinsey may be in a different league, but you understand what I mean. From there into the startup world. And I'm curious what you take from that experience at McKinsey into a startup company, which at some level seems like it's really different.
It's very different. And I think the guys like me that they just decide to move from consulting to a startup, we're looking for something different, right? As a consultant, you get to think and you get to solve very tough problems, but you don't get to see them in action.
Right.
Whenever you go into a startup, it's the other way around. I mean, you have to be solving problems every day, in and out.
The whole thing's a problem.
Yeah, the whole thing. And it continues to be, and it will continue to be for the rest of your life.
Right.
What is great is when you leave as a consultant, you have a very good toolkit. And you can put structure to problems. And
that's the whole thing, though, right? Is that toolkit of being able to take structure to a problem, and actually in reverse, to take a problem and structure it in a way that then can make solutions viable is super key, no?
The other thing, it's as a consultant, you get to see different industries, tackle different problems. So when you go to startup, it's a very different problem on a daily basis.
Sure.
So you don't get afraid of that, and you get to become an expert of almost anything instantly.
Right.
And I think it's great. Today, one of the best performing teams that we have are made of consultants.
Yeah, fair enough. You've kind of done this in reverse a little bit, right?
Yeah.
But it's interesting, no? What about you? What have you taken from all the stuff you've learned over time in kind of where he moved to into what you're doing now?
Well, in my case, I think my background has helped me in a few areas, right? The first one, I would say, being able to have worked in Latin America and Europe and US,
right,
would that in itself provide me a different approach to many things, understand different cultures, different regions of the world, a global mindset.
Do you feel like having that global mindset is really important? And do you feel like you've seen the change in yourself, if you know what I mean?
Yeah, definitely. And I think it's very, very important, especially when you deal and you work with companies like Kavak, where they have also a global mindset, that where they want to conquer not just Latin America, but the entire world. And
right,
you have to be able to understand that thought process and join them in that mission, right?
Yeah, I mean, we'll get to expansion later, right? Because I want to kind of tell a little bit of a story here. But as a guy who's worked outside of his home country for 32 years, you can feel your mindset changing over time. And you can also feel like it's never going to go back to where it was before. In a way, it can't, right? Can we start at the beginning here for me? Talk to me about the state or the status of the pre-owned or the used car market in Latin America. We can start there. Before Kavak? How do I pronounce this? Kavak.
Yeah, sure. So I'll tell you a bit about the industry, and this is something that I feel very passionate about, so I'm sorry if I get overly excited.
I love it.
So the used car industry, it's huge. I mean, a lot of people underestimate it. Mexico alone, it's a $60 billion market.
Wow.
When you put Brazil into the equation, it's a $120 billion market.
Just in those two countries?
Those two countries.
Go ahead.
And then when you combine all the other geographies where we operate, today they stand at 10. We'll get to it in a few minutes. That's almost $500 billion addressable market.
But is it fragmented, consolidated? Because there is no brand. There's no used car brand, right?
This is the most amazing thing. Almost 80% of the transactions in Latin America happen between peers. So it's
between peers, meaning I have a car and I sell it to you.
Yes.
Ooh.
And the problem is that when you're working or when you're dealing in emerging markets like where we operate,
fair enough,
there are no institutions, right? So there is no legal framework to help you make the decision. There is no context, and almost 40% of the transactions end up in fraud. And it could be all sorts of fraud, whether it's come with unpaid taxes, unpaid fines, kidnapping, extortion, or even getting murdered. Yes.
Okay.
So for me, one of the reasons why I joined Kavak is I had one of these experiences not too long ago.
When you were buying or selling your own car?
My mom's car. I was trying to sell her car.
Oh, no.
And then I had this express kidnap. So it's basically they take.
I had that too. I went for that same experience. I got hijacked during.
Yeah, you got hijacked where?
Yeah, in Argentina when I was driving my car. Yeah,
really.
Yeah. This happens. This very often, right? So
I had no idea.
Yeah, and they take you to different ATMs and they get as much money as they can from your cards.
Right.
And this is 40% of the transactions in Latin America. Not only that, because all these transactions happen between peers, there is no financial institution that is willing to finance the asset because they don't trust it.
Right.
Right?
Go ahead.
So
there's not even, because in Thailand where I live, if I want to buy or sell a used car, there's a lot normally somewhere. It's not generally peer-to-peer. It's peer to kind of fragmented 200 car lot. And I can go to 3 or 4 of these. Now, there are businesses that feel like they're Kavak in Southeast Asia that are trying to solve the same problem, but not for the same reason. Go ahead.
And we know those players. We're friends with them. But the thing is that financing, it's so important. Only 5% of the transactions in Latin America get financed, as opposed to the US, which is closer to 70%.
And is that's for all the reasons that you were talking about, because it's peer-to-peer?
Yes.
And just because it feels so dangerous and you're not sure if it's actually going to transact or not? Is there fraud on the financing side too? In other words, I say I'm going to buy a used car,
yes,
but then I don't?
On both sides. I mean, if you are the one selling the car, then you can forge the documents. If you're trying to get the financing, then you can fake your identity. There are so many things that are happening.
So in a $500 billion market, this is a massive... We talked about solving problems before, but I wasn't sure we were going to solve this problem.
So when you think about Kavak and the solution that we bring, we are a vertically integrated used car e-commerce that we have 4 different businesses at the same time. So the first business, it's buying the cars and selling the cars. Very traditional business.
Right.
However, when we sell the cars, we also offer extended warranties. And we can only offer the extended warranty if we can ensure the quality of the vehicle. So we have a second thing, which is refurbishing. We have the largest reconditioning centers in Latin America, and I would say in emerging markets.
I have to know how we get here, though.
Sure.
I have to know how we get here. So before Kavak, it was all peer-to-peer.
It was all peer-to-peer.
But you don't just wake up one day and everybody realizes Kavak is there, right? So how do you, and for my money, the biggest problem for any new business isn't the product or the service that they're providing. It's the discovery of that product or service, right? Even because for good technologists and for good businesses, funding is relatively easy, relatively.
Not anymore.
No, but it's relatively easy, right? Of course, it's hard. Everything's hard. But on the scale of things that are hard, it's relatively easy. But it's discovery of that and the trust of that, right? So how does this play into what this is doing? Do you know what I mean? Because trust as a part of building that product is also super important. And if you can't protect something, then maybe you can't build the trust around it as well. How does that work?
Well, in my opinion, he's the expert of how they have built the trust, but having a platform approach is about that, keeping both parties, all the stakeholders involved, happy and being able to talk and perform purchases and other transactions within the operation, because they provide excellent service, right? And they guarantee the transactions between the parties. And there are other strategies that I'm sure they follow. And insurance is one of those that adds to that part, that service, that value proposition. Right?
Has to, right?
Yeah.
So there's an exchange quality here, almost like a stock exchange, right? So like when I buy a share of Apple, I could be buying it from you, but I don't know that, right? And the trusted party sits in the middle. That's the stock exchange. They handle settlement. They handle listing requirements, right? So the listing requirements kind of get to this refurbishing in a way. Here's my car. Well, it's not good enough to be sold yet, right? So, and don't worry about that. We'll buy it from you, and then we'll fix it up in a way that makes it okay, right? So that the tires are okay, the axle's working, that the engine's not broken, and then sell it on. And now it's no longer peer-to-peer. I don't care who gave it to Kavak. Is that fair?
That's fair.
Go ahead. So what else? What else are you doing?
Yeah, so back again. First business, buying and selling. Second business, reconditioning.
Yep.
Today we have almost 1 million square feet, and now 10 million square feet of reconditioning facilities around the globe.
That's unbelievable.
Then the third business, which is for us one of the biggest enablers for growth, it's financing.
Right. So this gets back to this question is, we talked about this before we started to record, right? But are we a platform company? And if we're a platform company, are we using the automobile as a vehicle, no pun intended, to create a fintech? Do you think about that internally? Because you're already doing insurance, yeah?
Sort of, yeah.
Go ahead.
So the fourth business is basically building the platform and the ecosystem that goes around the vehicle.
Right.
And internally, we call it Kavak as a service. And it has very different streams. The first one is logistics as a service.
Where does logistics come into play?
So if you think about our business plan, if we do it right, in about a couple of years, we're going to be making 100,000 logistic moves per day.
So buying and selling cars all
And
over the world.
reconditioning and
reconditioning
servicing them
them all.
and doing fleet
so
management.
getting them from me through the reconditioning, through the fleet management, somehow to you or to some end buyer.
When we think about the ecosystem, and this is a bit of the vision that we're trying to build, there are many interactions that happen between you and your car throughout the year.
Sure.
Right? At some point, you need to service it, you need to recondition it.
Yep.
And if you go out to party and you don't want to drive, then you can also ask for a driver. So all those connections, we're trying to build them for you. And at some point, logistics is basically the plumbing, right?
Yeah.
At
It's
the same
the back
time-
end of all this stuff.
Yes.
Yeah.
At the same time, we're trying to do some image recognition. So whenever we pick up your car, we take pictures of it, and we can identify if there are any dents on the car. So whenever we deliver the car to the next place, we take the pictures again, and we identify if something happened throughout the...
And do you use that then for the insurance side of the car as well?
We are thinking about it, and I'll get into how we are working with Chubb on this. But just wait for it for a few seconds.
I can't help it. I told you I have a lot of questions. I'm so interested.
This is great. And then the other thing is, while we're doing these moves, now we're training our drivers to do some sort of test drives.
Your logistics drivers.
Yes, so it's a marketplace.
So the
right?
guy or the gal who's moving the car from Rodrigo to your centers, how many millions? You said 1 million?
1 million square meters.
1 million square meters of refurbishing space or reconditioning space. You have drivers that actually are employed to do that. And are those the same drivers that if I've had too much to drink one night will come and pick me up as well?
It's a marketplace.
Go ahead.
So think about the gig economy, right?
I understand. I get it.
It's basically, I don't want to say brands, right? But
No, but you're building a gigantic ecosystem here.
right.
How many people are employed at Kavak, even peripherally?
So on our payroll, around 7,000 people.
Yeah, but if you have
Then
a
with
gig...
the peripherals,
Right.
it's more than 20,000.
Yeah, that's what I was thinking. And that number is just going to keep getting bigger.
Yes. So Kavak as a service. Let me complete the idea.
I have so many
the
more
first one
questions. Go
was,
ahead.
was logistics. Then we have the image recognition. Then we have everything that has to do with reconditioning, so doing spare parts. And eventually, we're going to be the largest fleet manager there is in emerging markets.
Right.
So with that, then comes spare parts, and then inventory management,
Uh-huh.
and then everything that comes to it: services, maintenance, paying your taxes, paying your fines. There are some environmental services that you need to do to your car.
Fair enough.
So we're trying to build all that in our super app. Long-term vision, and this is what gets me super excited about what we're building. It's after you buy a car with us, we're going to ask you, hey, Michael, do you mind if I publish your car in my ecosystem?
What does that mean, publish?
Listed.
Yeah, I understand.
As a car that I can sell.
As a car that you can sell.
Yes. Since your car has a GPS and I get to see it twice per year,
Right.
I know the status, right?
Yep.
I know how you drive.
Yep.
I know how you use
And
it.
I bought it from you.
Yes.
Right.
So I can be listing your car, and eventually, if Rodrigo is interested in your car, I can just offer him your car and all the other cars like yours in the region with a reverse auction.
So you said super app, so I can't, and I already had this question in my mind, but I have to ask you this. If you have all these cars, if you're refurbishing all these cars, if you're buying and selling and transacting all these cars, and if you're hiring or have a marketplace for gig employees to provide some of the services that you don't want to have full-time employees do because you don't need them necessarily, and if you consider yourself a financial services company at some level, are you going to flip this thing on its head as well and also do ride sharing?
No.
But think about it for a second. Are you sure? Are you sure?
We've been discussing this internally for quite some time, and it's nothing that we want to do in the short term.
In the short term, I understand. But you understand why, right? Because, again, not to keep dragging this back to Rodrigo, but if you think about it, you are now building, if you have 7,000 employees, and then you have 20,000 people kind of ancillarily or peripherally around you, all of them are gig workers. You have all this money coming through this system, right, that you either get on a 30, 60, 90-day payment cycle, which can be recycled, right? If you understand the way velocity of money works, you're a CFO. I'm not teaching you. But on your side, all of these people then are going to need to be insured as drivers or health insurance or all these things that you're providing. If you're already working together, is that what this ecosystem is going to look like at scale?
You go.
I'm asking.
Well, in my opinion, what it's
it just looks like a massive opportunity.
It's a massive opportunity. It's we are very proud that we are starting this relationship with Kavak and with Moises and the team. But what really, in my case, gets me really, really excited, it's all the data points that they have of the users and all the creative and innovative services and products that we could co-design and co-build together. That for me is like an accelerator of change in our industry, right?
Right. I mean, you heard me say this, right? That is it a product company? Isn't every company at some level, if they're a good company, a data company? And then discovery through media, right? So we talked about this before. You want to talk about? I interrupted you somehow because I'm asking too many questions. But go ahead.
No, this
pick
is
up where you left
great.
off.
And this is the passion that we all share, right?
You can feel it, though, right?
Yeah, you can also feel it on this side. When it comes to financial services, and I think that's one of the questions that I didn't answer before.
Go ahead.
We don't perceive ourselves as a financial services company yet.
Yet, though, right?
But when you think about what we are trying to solve, and the fact that we're taking care of the most valuable asset of most families where we operate,
right.
the car. Right? Most of them, they will never have enough money to buy an apartment or a house.
Right.
So the biggest asset that they have is a car. We're taking care of it. We're providing them access to it. What we think our mission is to help people mobilize, but not only mobility itself, it's also social mobility.
Yeah, exactly.
When you give a car to a person, that's the one thing that can change their life. It can make them more productive. It can make their life safer, easier.
But you're also introducing them to what I'll call controlled leverage in their lives.
More than that.
Go ahead.
In our case, today we are the largest used car underwriter in Mexico. It's been only 2 years.
Underwriter on the purchase and sale side, not on the insurance underwriting side.
On the lending side.
That's what I mean. Yeah.
Yes.
Right.
We're the largest used car underwriter. Today we're just providing loans, right? But the next step, and this is a product that I love, it's we want to give people access to a credit card.
Right.
That can be backed by the car.
Right. I mean, this is the next, because you're basically taking the asset that they have and collateralizing that asset into the use of other money for velocity.
Absolutely.
Yeah.
But then the thing is that today, 40% of our customers, this is the first loan that they ever had in their lives.
That's my point, though, right?
And it's a $7,000 loan.
Right.
So whenever you're talking about all the fintechs that are emerging in our countries, they're providing cards, they're providing access to microlending.
Right.
Like $300, $400,
Right.
$50.
Right.
In our case, we're betting on them. And we're saying $7,000 loan because we trust the asset, we trust you, and we know that we can help you have a better life.
Yeah, look, we spend a lot of time in emerging markets out here talking about microfinance into major finance. I'm not sure I believe it yet, and I'm not sure I've actually seen it be affected that way, right? It's microfinance into microfinance into microfinance into no finance. But this idea of we're making a bet on them is actually really interesting because you're saying, you know what, $7,000, it's the biggest asset you have. We'll work with you to figure out how to understand how underwriting and loans work. And if you can figure that part out, then what else does it give you? And you're right, it's not just micro mobility, it's economic level of mobility as well. Because if you can then get from here to there, then maybe you can get a better job. And if you can get a better job or be better employed, then you can make more money. And if you make more money, then you can buy more financial services products. And because you already, and I want to talk about the data now, if you don't mind.
Before that,
go ahead.
The crazy thing about this is in Mexico alone, we only have 4 million credit cards that have a credit limit beyond $5,000. But we have 45 million cars out there. So if we manage to launch this product, we can reach more than 10 million people with credit facilities north of $5,000.
So I find it super hard to believe, and I'm happy to be wrong, that when you got your car stolen or when you were kidnapped, right, when you were doing this, that you were thinking, if I can just create a platform to do this, the 45 million people that own cars can then get credit cards and build this. Like, I can't imagine that you were thinking that. I'm curious, though, right? Because I've thought about it, but I'm not involved in it on a day-to-day basis. How did that develop?
You mean from the initial vision?
From the initial vision of, I just got to figure out a better way to sell a car, right? Because here's the thing. You have a problem. I wanted to sell my mom's car, right? And this happened to me. This is terrible. So I want to solve that. But then when you sit around with the C-suite team or the other people and they're like, yeah, but you know what else? There are 45 million people in Mexico alone and only 4 million credit cards. Wait a second. If we could give them financing for this and then use the financing to then help them finance their credit cards and all this other stuff, did you sit around and just go, wait a second, this is because even I'm getting a little bit of a chill. Like, this is going to be a much bigger business than I expected. Do you know what I mean?
I mean, you just don't wake up to this, right?
No. But I want people to understand that.
There are so many things that needed to happen before. I'll just give you a brief overview of what happened. I mean,
Go for it.
I mean, we've been on the market for 6 years.
Yep.
The first 4 years, we only operated in one city, one product, not even lending. Right. So we're just trying to crack the basics of buying at the right price, selling at the right price, and making sure that we have the credit facilities to scale the business. Right. Second thing is we need to make sure that we could recondition better than anyone because we're multi-brand, multi-year, and we need to be good at everything, right?
Yeah.
And the third thing was building the financing capabilities of lending, underwriting, but most important, repossessing.
Go ahead.
Right?
Why
because
repossessing?
in Mexico, there is no repo law. So if for whatever reason your customers stop paying, we try to get to terms with them, maybe exchange the car for a smaller car or extend the term. We try to provide alternatives. But if none of that works, we need to repossess the car. Right. And in Mexico, there is no legal framework for that.
Is it dangerous?
No.
Okay.
No. But we need to create that framework. And then after that, when you make sure that you can do all that, then you think, oh, there is something more than this.
Right.
And we are the only one. I mean, not even the banks can do what we do. Because for a bank to repossess a car, it's a liability. Because then they have to sell it.
Right.
And
they're not in the car selling business.
Right.
It's a big problem.
No, they lose money on that.
They do.
In our case.
Just like they do when they repossess a house. They're just like, we're not in the house selling business.
In our case, it's our business itself.
Right. So you should know that better than they do.
And we're working with them. We're helping them.
Right.
We're providing our pricing algorithms for them to do underwriting. We are providing access to all of our data. And this is the question that you wanted to lead us in. Data.
Right.
Very different types, and we can go whatever you want, but pricing, incredible. We web scrap more than 100,000 listings on a day-to-day basis.
Right.
We've reconditioned more than 500,000 cars. We have inspected many more, right? We have underwritten more than 30,000 loans.
At some level, do you think you can control the price of the car? In the sense that you know where everything's trading. Right?
Again, control.
Not control, but you understand what I mean. Like you know where that thing's going to trade within $100, $200, either way, up or
we
down.
Have perfect visibility of how the markets are behaving.
Right.
What's the appetite, demand, and supply.
Right.
But most important, when it comes to insurance, 100% of our cars go with a GPS. Right. So we have a lot of telematics data.
So is that conditional? On the purchase of the car?
Yeah.
So like I buy a car from Kavak, it has a telematic device in it.
Yes. And these are it's one of the things that we really love because we're collecting so
much
much
do you
data.
Insert them? So you actually put them in?
The GPS.
The telematic data or the GPS, right?
Yes.
Because depending on the age of the car, not every car is going to ship. I mean, from now on, sure, they'll ship with a GPS.
No. We install the GPS.
It's interesting.
Because for us, it's all about the data, right?
Yeah.
It's all about being able to be there preemptively to provide maintenance.
Sure.
It's going to be there in case that somebody steals your vehicle.
Right.
In case you have an accident. We want to know. And we want to be able to provide telematics to our insurance partners to understand who was guilty.
Right.
Right. And that's just the beginning.
Go ahead. Did you want to add something to this?
No, I was
from the data perspective, because I'm always curious about in a world that's concerned about privacy, right? How do you get around some of the challenges around the privacy stuff to share data because you're not doing your own insurance underwriting? How do you work with them?
Well, that's something that still needs to be worked together. Yeah. I mean, and there are some strategies that we are pursuing in terms of sharing data lakes and also adding into the data feed our own data about their customers and how that behaves. Right. So we could provide them with also some other data points to build better services or products. But in terms of what he was describing, like the big businesses or the buckets of the strategics that they have, it's not only about the car, right? The loans that they provide, right? And the credit card that he was talking about, that also could be insured. That also can play there.
So this is the other question for me, though, right? If you're now becoming a financial partner for these people and you're teaching them about how to use leverage, right? There is sort of a literacy factor here as well, right? Because if I've never had a loan before, I don't know how a loan works. And whether you're explicitly or implicitly teaching people how to understand leverage and debt, you're also gathering what I'll call alternative data on how they're interacting with their debt. And the more you know about them, the more you could potentially lend them, right? So you're a car company, I put it in deep quotes, right? But in other parts of their lives, they could use leverage, but also use insurance as well. And this is why I asked earlier, are you a car and platform company or are you a fintech? You said moving into fintech. And if that's the case, do you see yourselves having all this really useful and rich data to then be able to make other product lending as well?
The answer is yes. The short answer.
I see
right?
you seem sad about this.
No, the short answer is yes, and the thing is that it's a clear path forward. You know, we have access to very non-traditional data. We have
that's why I said alternative. Yeah,
yes.
Go ahead.
So we have driving patterns, right?
Right. So you actually know where people are going.
But not only that,
how they drive.
How they drive.
Yeah, no, I get it. Because there's a personality in how they drive.
Yes.
Yeah.
Behavior.
Yeah,
behavior.
Of course.
And going back to the insurance, traditionally the way that insurance companies today do the insurance underwriting is based on the asset and age,
right,
gender, and zip code.
So when you say the asset, you mean the car, and then the age. I mean, obviously the age of the car, but the age of the person, the gender of the person,
right?
Yeah, really. So
and
it's like in some places, I think in Thailand actually, if you're a 56-year-old, 57-year-old male driving a white Honda Accord that's 3 years old, you get the same price.
Yes. Yeah. Yeah.
I could be a maniacal driver,
yeah,
and he could drive like my grandfather,
yeah,
and it's the same price. Yeah. And what you're suggesting is that's just completely different.
What we're trying to do with them, it's what is the best way to exchange information so that good drivers get better prices, right? Mm-hmm. And
I'll say rather than better, fair. Well, more fair prices, right? If you
risk adjusted prices,
because the risks are different, though.
Right.
Yeah.
Sorry.
Exactly.
Go ahead. Yeah.
Oh, yeah. Go ahead.
100%. And this is the beauty about it. If we were to become an insurance company, we're not trying to, but if we were to become an insurance company,
but you could become an MGA.
Totally. And if we do, we would displace most of the insurance players in our ecosystem, right?
For car insurance.
Yes, because we would be able to do better underwriting than them. Right, we would be able to offer lower prices to better drivers or less risky drivers, and then all the riskier drivers would be with them, right, at the same prices. So it would be very hard for them to compete with us. Not only that, if there is an accident, we can bring it back to home and we can recondition it.
I understand.
Cheaper than them.
Right. So what happened to all of the mechanisms? Kavak, 6, 7 years old? I can't remember. 6 years old. So 6 years ago, it didn't exist. Everybody was trading peer-to-peer. 6 years in, people must know about you. Otherwise, you wouldn't operate. And you said 10 countries. We'll get to expansion later, right? You wouldn't be operating in 10 countries. But what happened to that peer-to-peer market? Do you know what I mean? Did it just like vaporize over time? Or are people still trying that? Because for me, the hardest thing about selling a car, and I have more information, I think, than most people that you're dealing with, is just like, what are the legal things I need to do? What kind of forms do I need to fill out? Who do I need to tell? Where do I need to register it? What happens to the plates? Like, do you handle all of that stuff too?
Yeah, we do. What are the rest of the people doing? I mean, we're still very small. In every country where we operate, we're less than 1% of the transactions, right?
Okay.
However, most of the people are benefiting from what we do. Because now what's happening is when you want to buy a car from somebody else, you ask them to go to Kavak.
That's what I was going to ask you. That's what I was going to ask you.
And then we give you a report.
Right. So if I want to buy a car from Rodrigo, I'd go, dude, that's a super nice car, but can you take it to those guys first, 100%. And then we'll do the. There's this happening.
And then you're gonna see the prices that we offer, and most likely you're gonna have a different expectation from the counterparty, right? Maybe pay a bit less, maybe pay a bit more,
right?
Depending on what it is. But you're gonna see our report, inspection report. The one thing that you won't be able to get, access to financing.
And I don't understand.
If you want to do the transaction peer-to-peer.
Oh, no one's going to do that, though. Right. It's not going to happen. But because I'm going to go to him and I'm going to say, "Hey, I'd love to buy your car. It's not that I don't trust you and like I'm married to your cousin. It's no problem. But can you please take it to Kavak because they'll not only refurbish it, but they'll test it. And I'm willing to pay even a slightly higher price so that I don't have to bother you in a way. Right? Because now it's not a purchase between you and me. It's a purchase between you and me.
But remember, it's not only that, it's access to financing.
Sure,
this is the most valuable asset in most of our customers' lives.
Yeah.
Not only that, we would be the only ones that would be available to provide you extended warranties, up to 2 years of extended warranty.
Right.
You don't get that.
Who does the pricing for you for the warranty stuff?
Us.
Interesting. Very interesting. Okay.
So yeah, I mean, we're just trying to transform an industry that hasn't been addressed for the last 100 years.
Yeah, fair enough. Most car companies, right, that sell new cars, whether it's Toyota Motor Credit or Ford or General Motors Acceptance Corporation, like a lot of the money they made was really just from the financing.
Mm-hmm. All the ancillary services. Yeah.
All the other services.
Yeah, it's crazy. When you look at the P&L of the OEMs and the distributor agencies, almost 30% of the profit comes from the metal transaction, buying and selling.
Right.
Then 50% comes from financing.
Yep.
And then 20% from services.
From services, right. Yeah. Most people, though, when they think about a car company, they think they build the car for X. They sell it for X times like 1.375 or whatever that number is, whatever their margin is, right? But this is why I like to talk about the finance side of it. Because if you go back and look at the Ford Motor Credit Corporation or Toyota Motor Credit Corporation or GMAC, they're making 50% of their money from there, right? And that's fascinating. But in the used car world, right, so it's not just the financing that was impossible to do, because the financing is really hard. The whole financial transaction around it has been really hard as well. And why would you insure a car that's been traded peer-to-peer, right, when you don't really know what the status of that car is, and there hasn't been a way to evaluate the state of that car is it good or bad as well? So it changes what you're doing as well, no?
Absolutely, yeah. Like it comes down again to the data points that they have.
But how do you share that data?
Well, we're in the process of figuring it out. Yeah, we're in the process.
Because we spend a lot of time, in all the conversations that I have, we spend a lot of time talking about, and I'm going to go through some technical terms, right? Microservices, right? Because you work at different companies that are completely separated, right? But you can build these little microservices, right, that end up being cloud native. Again, not to be too technical. And those cloud native things are all API first, right? So you can do API to API and maintain that connectivity and have the data go back and forth, but still maintain the anonymity and the privacy, right? And that actually, for me, from a technical standpoint, is fun. We've had conversations in this room where just the API connection alone has increased the business relationship by 2 or 3 times, because there's friction, right? If you need data on a certain automobile, just getting it's hard. But once it's not hard, then the pricing on your side and the financial management and risk management on your side is also much easier, no?
Yeah.
Does that make sense?
Yeah. Again, I think the data strategy is something that it's not going to be built by Chubb or by Kavak. This has to be built together.
Right.
And those connections, those data flows and the data strategy has to be agreed with the shared vision of what is it that we want to do this.
Right. So one of the reasons why I talk about platform companies versus product companies as well, I'm super interested from both of you on this, is because we spend a lot of time looking at a company like Shopify. What does Shopify do? Right? And again, stop me when you feel like that doesn't make any sense, but I feel like it will. Shopify is just a platform that allows you to build e-commerce stores. But they know they can't do everything themselves. Right? Like you said, it's not going to be built by you. It's not going to be built by them. It's going to be built together. So what they do is they have a platform strategy where they say to other companies, if you can build things that connect to our platform that our users can then use and employ in their business building, we're happy to plug in. And that's this horizontal platform that they're building. Do you look at your business the same way, where other companies can plug stuff in? You're like, oh, we can't build that thing ourselves, but we're happy to plug it in. If it doesn't work, you unplug it. But that alone could be a gigantic business.
Yeah. I think it's mostly us designing product in such a way that we can provide our services to other companies.
Fair enough.
Rather than other companies plugging into our ecosystem just yet.
Yep, fair enough.
I think the initial transition or the initial stage where we want to go, it's providing our pricing algorithm. Kavak as a service, I mentioned it's the Ford platform, right?
Yep.
So it's pricing, it's financing as a service.
Kavak as a service. In my head, I just keep saying KAAS. Kavak as a service. Sorry, go ahead. That's why I was smiling.
So it's pricing, right? It's financing as a service. It's logistics as a service. But not only that, it's complementary services. The fact that you can pay your taxes and do all the paperwork, whether it's title transfer, whether it's you name it, right? Or even customization of your vehicle. So everything could be done through our platform. And what we're trying to provide is these to the OEMs, to the super large truck logistics companies in every other place where we operate, and even the dealers or the other used car marketplaces, like the ones that you mentioned that we're friends with.
The ones that you mentioned that we're friends with that will go unnamed.
That will go unnamed for a while. But the fact is, we are reconditioning and we have more experience than what they do. And not only that, we might have the largest catalog of spare parts and the compatibility between those spare parts and the vehicles, which might be not relevant, but it's a huge issue to solve. When you're trying to recondition,
I'm thinking, go ahead.
There is no catalog that says, well, this part is going to fit to this car.
Right.
And almost 20% of the times you make a mistake and you need to reorder the piece.
Fair enough.
And that extends how much time the customer is without the car.
Right.
We have the best catalog so far because we're building it. And we are multi-brand, multi-SKU. And we can provide those services to all the refurbishing companies around the globe.
So I used to ask some of my buddies when I was working in the financial services world, like why they didn't go out and start their own companies. And one of the things that the technologists would say to me all the time was, we love working at these big banks and financial services companies because we get to solve big problems. And technologists love solving big problems. And I can't help thinking, because every time you mention something, I'm trying to take like 2 or 3 steps forward and try to think just how much fun it is. Because you were joking a little bit before. I was like, oh, that's hard work. And you're like, oh, yeah, forever and for the rest of my life. It's kind of like forever and for the rest of your life on this one.
No, it is. It is. And the one thing that we love about this, if you get to know the top management team, we are very ambitious. All of us, right?
You can't do this without being very ambitious. Not possible.
The only way that you can have such a high-performing team connected and motivated.
Tell me.
It's that the ambition of each individual project, it's large enough
to be its own business.
Yes.
That's what I was thinking, right? Because the financing alone is its own business, the insurance alone is its own business, the refurbishing alone is its own business. That's why I said earlier, you are taking fragmentation into consolidation of all that fragmentation. It's a gigantic thing. And just to get back to your numbers, $500 million, $500 billion.
Addressable market.
Yeah. But is that going to get bigger or smaller? And I wonder if you think about and I think it's very far away. We can argue about this, right, until we're blue in the face. But I used to wonder, like, what the impact of autonomous vehicles was going to be on used cars, new cars, and on the insurance, right? Because who's going to own the insurance? Who's going to insure it? I used to think about this a lot. But I'm pretty convinced that unless something radical changes, and again, tell me where I'm wrong, we don't have to worry about that for a while.
To your question, $500 billion and growing.
That's my point.
And I'll tell you why.
Go ahead.
When you look at the statistics, at least for Latin America, only 2 out of 10 people have a car.
Only 2 out of 10
In the
people
US,
have a car?
it's 7 out of 10 people who own a car.
And what are the reasons why only 2 people?
It's the financing.
The financing is a big component.
It's financing.
Yeah, you just keep, do you feel like you're repeating yourself over and over again? You haven't gotten this yet, Michael. The idea is that it's the idea that not just that the car isn't good, or not just that I don't trust somebody, but they can't get it financed.
Right, because no financial institution
wants to lend
against that asset.
So
what happens? Don't know it.
But what happens now? Because this is also super interesting. You have all this data, but the banks and the other lenders are sitting on the sidelines going, wait a second, those guys are lending to these people, and now they're lending at scale. And now they're telling me that they know how to lend at scale to this massive business that's growing and growing. What are we doing? Do you know what I mean? Have they reached the point now where they're looking at what Kavak is saying and going, oh no, they're not a car company. That's a fintech. My words, yeah, not yours. And they're going to eat into all of our lending. Like, do you go get a banking license as well? You're sitting there thinking, will you shut up?
No. The way that we work with banks, we see them as perhaps our most important partner.
Because they trust you, so they give you capital. I mean, you just announced publicly an $800 million capital raise, right? But it's not a funding raise for you. You're not going to take that money, I think, and like hire more engineers and do all that stuff. That money is CapEx spending, I'm guessing, for financing.
It's
partially.
All right. So,
but you understand what I mean? I don't know the books 100%. And records of Kavak. You do, but you know what I'm saying, right?
I'll tell you a bit of how we approach this. If we were to do financing, we want to do it because we have access to the customers, we have the channel, but we don't want to keep the loans on our balance sheet.
Yeah, of course.
So the most important thing is the way that we partner with banks. We are the underwriters. We stabilize the loans, then we pass it on to them, but we keep doing the services or servicing the loans.
You service the loan.
Because we want to keep the relationship with the customers.
Of course.
Right? It's the same way with insurance companies. At some point, we might be the guys doing the underwriting, MGA, and then we're going to pass it on to them.
Right, of course.
Right? Because we we have the risk appetite, right?
Yeah.
And
Well, you have the data that will allow you to price that risk appetite. They have the 150 or 200 years of pricing risk, right? So you can have the appetite, but they have
and they have the
knowledge
pockets, right? They
to
have
be able
very
to do
deep
it.
pockets.
For sure.
And these facilities that we just closed, they are forward flow agreements. One of them is a forward flow agreement. Basically,
Right.
it's an agreement that they will buy stabilized loans from us, right?
But it's interesting the way it gets announced, right? It's just interesting to me.
Yeah.
Right, because it doesn't say anywhere in the newspaper it's a forward flow agreement, right? And nobody who reads this is really going to understand it. But I think it's super interesting the way, because it's a big number.
Yeah.
Yeah, but what they're basically saying is we trust the fact that you guys know what you're doing. And what we're saying to you is we'll do almost $1 billion of business with you over whatever time period it takes for you to access that credit. That's kind of cool.
And the beauty is that we're going to tackle it in less than 18 months.
Yeah, I didn't want to ask what the time frame was, but I was pretty sure it wasn't in the next 10 years.
It's going to be super fast.
Right. So that's the way the banks are now accessing your risk appetite and the data that you have to then, they don't even have to price it in a way. They just get the benefit of, right? Yeah.
Right. I mean,
You're like their biggest
They
agent.
access the portfolio, right? They go.
Sure.
Yeah.
But this is different than what happened in the 80s and 90s when loans were getting repackaged, because you're not doing that.
No.
You're not doing different tiers and different sectors of like the A's are really good, but the B's, C's, and D's are offset by the risk in the A's. You're just basically saying, we've done the math. And the likelihood that every loan we make is going to get paid off is this, and not related to this, and packaging them and hoping that like the bottom tier doesn't die. You're basically saying this group of loans, we have high confidence that it's going to work because of all the other things that we're doing and all the services.
and
we're
remember,
offering.
these are all collateralized loans.
Of course, there's the collateral, but the collateralized
And
part
it's
of
a
it,
very liquid collateral.
that I don't know. But the collateralized part of it makes it a little bit tricky because, like you said, the banks are not repoing the cars.
We are.
I know you are. But for them, they fall asleep at night worrying about, can they actually get that car back? But what you're saying
Since
is,
we're doing
you
the
can.
servicing.
Yeah.
They don't have to worry about that.
I get it.
So that's why we think of a very long-term partnership with the banks.
No, I love it.
The same way, very long-term partnership with the insurance
It's the same thing. So this is the other thing that I want to talk to you about. When you build a relationship with an insurance company, with a bank, what's, at least at the beginning, right? What's the initial reaction and what's the light that goes on inside the head of the partner that says, oh, I think this is going to be okay? Maybe you can talk about that.
Nah, you go first.
So I would say that
Because the first conversation is always going to be no.
the first conversation is, you guys are crazy.
Right.
I mean, we've been pitching the same story since the beginning.
I know.
For 6 years. Exactly the same thing, right? It was
Right.
part of the vision and it hasn't changed.
But isn't that the whole startup thing? I say this a lot, right? The companies that succeed, eliminating the quality of the product, right? Because there are other people that can figure out what you're figuring out, but they don't necessarily have the patience or the stay-with-itness to be able to just keep telling the same story over and over again, knowing it's right, and kind of waiting for the market to catch up. But the market's obviously catching up to you. Otherwise, you can't have gigantic partners and gigantic banking partners. And you couldn't raise $800 million of a forward credit line.
It's a combination of
I understand
a lot
that.
of stuff,
I understand that. But just so people can understand, to do that. But this idea of persistence is actually super important. And at some point, the senior management team gets together and goes, I think they're getting it now.
No, we joke a bit about it internally, but we say, well, if they don't want to if they don't want to come to the table, we need to be bigger.
Right.
Let's get bigger, and eventually they're going to come to us.
Yeah, I say this all the time. At some point, we're going to be so big you can't ignore us.
Right, and it's crazy because with the banks, it has been the same conversation for 5 years. And
Do you laugh when you leave when they finally say yes? Do you know what I mean? In a good way, not in a bad way.
I do.
Yeah.
I do, but I really like it because now I feel that they are willing to hear.
Yeah.
Willing to listen.
But it's neat because it's not that your management team needs the validation, but getting that validation then means you can expand even faster at scale, right? Right?
Yeah.
Right. And that you can also work together in a way that's different. Yeah.
The same thing with us. I mean, it's kind of it sounds bad coming from us, but it's that now they have our attention in a way, right? I want to deploy resources.
That's normal, though.
Yeah.
I think that's super
It's
normal.
It's the nature. Of the
So
business.
you talked about 10 countries,
Yeah.
right? I mean, there's so much to talk about, obviously. I could keep going, but I'm super curious about this too. Because I talk a lot in this region, right? Because I've lived in Asia for the past 30 years about what it means to expand from Singapore into Indonesia, into Vietnam, into Malaysia. All these countries are very different languages, different cultures, different religions, different things driving purchasing. What's it like expanding from Latin America into the rest of the world? Because to be fair, most people don't think about Latin America as a hotbed of like finance and innovation, I'm not making a value judgment. And I don't
No, I'll say, I'll counter-argue that. I'll
please.
say not until the last 2 or 3 years, at the very least.
Though, right?
Yeah.
Fair enough. And I do think we're at kind of a tipping point. But what does it look like to you when you say, we know that the whole world looks like this. We see some things happening over here. How do you decide like where to expand?
Sure. So, I mean, to answer that question, I need to take a step back.
Please.
And as I mentioned before, the first 4 years, we only operated in one city, one product.
For
one
4
thing.
years.
4 years.
I love it.
That was Mexico City.
Yeah.
And it was not until we had the right tech stack, that we had the right product, and that we have everything in place to scale, is that we decided to actually move to different cities within Mexico and then move to different countries.
Can I ask you this, though? During those 4 years, did you get funding from external parties?
Yeah, I mean, those...
And were they pushing you to expand faster?
Oh, no.
Oh, go ahead.
No. I mean, the first 4 years, I joined on the second year, so we already had SoftBank in the house. I think we had Green Oaks, General Atlantic, and a few other big names, right?
Yeah.
And we already had them by the time that we decided to expand.
Fair enough.
So, once again, we needed to have the technology in place, and then we see ourselves as a private equity company itself. Whenever we bet on a country, we have an investment thesis.
Right. You have to.
And we need to have a minimum population. We need to have a minimum average ticket. We need to have certain conditions like...
Does GDP per capita matter to you?
It's not the GDP per capita.
Go ahead.
It's the average value of the transaction. Right?
Okay.
Because we need to make our unit economics work.
I understand.
And then it's not the GDP.
I love a
per
company
capita.
that cares about unit economics. That's why you're not going into the ride-hailing business.
You're talking to the CFO.
I know. I love it.
But it's not about the average car value, but it's also about the market size.
For sure.
So
because it only works on a percentage basis, right?
Right.
Because $7,000 some places, maybe $3,000 some other place.
And it's
In
crazy.
percentage terms,
When you
but
look at
yeah.
India,
Go ahead.
you have a very large population.
You do.
Right?
1.34 billion people. Yeah.
Right?
Yep.
But the average car transaction, it's around $4,000.
But what's the financing like there?
That's an important question. But
I know it is. That's why I asked it.
But for our unit economics to work, the car transaction itself needs to be break even. And then you make it profitable with financing and so on and so
Sure,
forth.
because you don't want to use the car sale or purchase as a loss leader.
Right.
Because then your unit economics don't work.
Right.
Right.
So in our case, and I know that there are some guys trying to do a very successful business in India, but for us, the way that we have structured our business, 3,000-4,000 average car transaction doesn't really make it.
Right.
Right. And when you compare the addressable market, the TAM of India, it's around 25 billion. Which is almost the same as Argentina.
Yeah, look, a large population. This is the big mistake that a lot of investors have made and a lot of company builders make. They look at a big population and go, well, if we could sell like a roll of toilet paper and everybody there, we're instant billionaires. But the reality is everybody can't afford that. So good luck with that business model, and unit economics don't work. You're right. India is a gigantic opportunity, but it's a developing opportunity.
But for us, that's how we think about expansion.
Right.
So market size needs to be there. Unit economics need to be there. And then the conditions like transparency, asymmetries of
Sure.
information.
So the business climate has to
low
work as
penetration, low financing penetration.
Right.
Like everything that we provide as a value add
Right.
should be set up, right, for us to be there and take over the opportunity.
So where do you go next?
So, I mean, we are by far the largest auto tech in emerging markets.
Okay.
When we think
How
about
do you define emerging markets?
When we think about our presence, we are in Latin America. So Mexico was our playground. Then we went to Brazil,
Yep.
Argentina, Colombia, Chile, Peru. And last year we decided to go to Turkey. And we recently started our operations in the Middle East, right?
In the Middle East, in the GCC?
In the GCC.
Okay, that's got to be a massive market. Because the transaction value has to be so high.
Yeah, but the population is not.
Population's not,
massive.
but the population's not massive. But
It's,
again,
it's a
the
$40
transaction
billion.
value side.
It's a
Yeah,
$40 billion business.
It's a big business.
Right. But
Yeah.
when you compare Mexico, it's 60, Brazil, 120, 140, Turkey, another 100 billion.
Yeah.
Argentina, 20 something.
I
And then
understand.
the Middle East, the GCC, it's 25 to 40,
I understand.
right?
Yeah.
So for us, those are the bets. We want to be focused on them for now.
Okay.
Although we're always open for conversations. I don't want to say more about this.
That's okay.
But we're always open for conversation.
Okay, guys, that was awesome. We covered a lot of ground. I really appreciate it. Rodrigo Valiente, a VP and the head of digital for Latin America at Chubb, and Moises Flores, the CFO at Kavak.com. That was awesome. Thank you both very much.